SF Desk Brief: has silver absorbed this move, or is control failing? Thursday, January 29, 2026. Silver is higher again today, but price alone is no longer the story. What matters now is whether the system has begun to absorb this move, or whether price discovery is continuing to slip out of paper control. Today's desk brief is about one thing only: what absorption actually looks like and whether we are seeing it yet. What absorption means, plain English. Absorption is the process where pressure is taken in by the system without further acceleration. It is not a pullback by itself. It is not consolidation by itself. And it is not volatility cooling in isolation. True absorption requires three things at the same time. 1. Physical premiums compress. 2. Inventory draw slows or stabilizes. 3. Volatility cools while price holds. If even one of these fails, absorption has not occurred. The checklist as of this morning: pass or fail. Physical premiums. Shanghai is still clearing silver well above the screen price. Premiums remain elevated and persistent. Result: fail. Inventories. Both COMEX and SHV inventories continue to show net depletion. Silver is not moving within the system, it is leaving it. Result: fail. Volatility. Silver did not stall after the gap. It held, then accelerated again. Volatility has not cooled, it has expanded. Result: fail. Currency backdrop. The dollar remains under pressure while treasury yields stay elevated. That combination does not absorb stress, it redistributes it. Result: still pressuring. Conclusion. As of today, absorption has not occurred. Why pullbacks without absorption don't resolve markets. Pullbacks before absorption do not reset structure. They clear positioning, especially leverage, but leave the underlying pressure intact. That's why these phases feel violent and confusing. The system tries to regain control. It fails. Volatility spikes. Then price is forced to do more work. This is not a sign of strength. It is instability inside an unhealthy pricing system. Strong structure does not prevent drawdowns. It explains why they happen mid-move instead of at the end. Scenarios and probability-weighted outcomes. Today's read. Scenario A: delayed absorption pullback, 35%. Physical premiums compress meaningfully. Inventory draw slows. Volatility cools. Paper markets regain short-term control. In this scenario, silver can still be pulled back toward the $100-105 area. That would be positioning stress, not structural failure. Scenario B: absorption fails continuation, 55-60%. Premiums stay elevated. Inventories continue to drain. Volatility remains persistent. The system fails to pull price back. In this case, the move does not resolve sideways. It resolves higher. Price discovery continues to migrate away from paper control. Wildcard scenario: 10%. Exogenous shock, policy, geopolitical, liquidity event. Temporary distortion in either direction. Does not change underlying structure unless absorption follows. Risk framing. This matters. This is not a market that rewards precision entries. For physical holders, structure matters more than daily swings. For mining stocks, volatility cuts both ways, even in a bullish structure. For leveraged exposure, this is the danger zone. Timing errors get punished hard. This is not fear-based caution. It is structure-based risk management. Bottom line: the market hasn't chosen yet, but it is being forced to. Absorption has not occurred. Control has not been regained. And until one of those changes, pressure remains unresolved. That doesn't guarantee continuation. It explains why volatility remains violent. We'll continue to track this daily, not with predictions, but by watching what fails and what finally holds.